Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Greg Dickerson. How you doing, sir?
Doing great. Michael, how are you today?
I'm doing well, man. The first two episodes were so fire. We talked about the housing market. We talked about the economic and earnings data in the second one. Kind of in both videos, we hinted that the next 6 to 8 quarters might be tough, might be a recession. Moderate to severe, we shall see, but a recession nonetheless. I want to talk to the people that might be impacted. Right. In video one, we clearly said mortgage brokers and real estate agents are already feeling it and likely will feel it more with crashing transactions.
Builders.
I'm sorry?
Builders.
Home builders. Yeah, home builders. Thank you. Video two, we talked about innovation companies and things that, if they're not making a profit, they may go to zero if they're just burning money. So if you're an entrepreneur, you're an agent, what do you tell them? Because again, you've brought to us good times never last, bad times never last. We are clearly entering the beginning of a bad time. What do you want these people to be thinking?
Yeah, get out of the business quick.
Run away.
No, I mean, it's like anything else. You have to innovate, right? So as markets contract, number one, you need to understand what that is, what's the potential, where's it going? I mean, there's always business and opportunities in every cycle, but this is the time to really be going back to the basics, going back to the fundamentals. And it always starts with yourself, investing in yourself, building your knowledge, your education, building your network, being out there. But at the same time, if there's no opportunity, then you got to go somewhere else. You have to change your business model. 2008 and 2009, what I did for years and years and years leading up to that no longer worked. I had to change my business model. And I've done that over the years. You always have to adapt and you have to improvise. You have to innovate, with the changing times in the economy.
Yes.
So if you're a business owner and you have a company, and things are changing, you need to look at where the trend's going, where are the opportunities, how do I innovate into that and redo what I'm doing, or do I just get out, and go do something else completely? So you really have to start looking at these things. The real estate industry as an agent in and of itself, and as a loan broker in and of itself, a mortgage lender, I mean, that's changed and innovated over time with technology and, discount brokers and, lending tree and all that kind of stuff, where people don't want to talk to anybody anymore. They just want to go online, fill out an application and get a loan, or just, go to Zillow, look at a property online and just, buy it without dealing with anybody, and ultimately, I think at some point, realtors may end up being phased out, because there's a lot of challenges to commissions and, things like that in a lot of areas. So, technology is revolutionary in a lot of ways. So you just want to kind of be ahead of that and think, what skills do I need to be now to be competitive? How do I build my network? If there's less opportunity, then I need to build a bigger, cast a bigger net. Or maybe I just need to change what I'm doing, the way I'm doing it, or just, complete business and reinvent yourself completely.
Yeah, I think that's exactly where I wanted to go with this conversation. It really, there's a lot of individuals that are going to be impacted by what we're going through. Mortgage broker is the easiest one, right? Refis are down 80%, better.com, all these other places are shutting their doors. It was predictable. We talked about it 6 months ago. It's here now. Real estate agents, I think your time is coming, right? There will be layoffs. You've seen Compass, you've seen Redfin make layoff announcements. There will be a lot of real estate agents who just don't make any sales. And if you don't have any sales, you have no commission, you can't pay your bills. So I think you're absolutely right. It's time to look yourself in the mirror. And I just love how you phrased it, right? What worked for you for a long time stopped working. You could either try to force it, let your ego kind of say, no, I'm different or better when the market's saying you're not, or you could change and pivot. And you've done that repeatedly. So it takes strength to pivot and say, hey, what worked doesn't work now. So
yeah, you have to. And home builders, all over the country, all the big home builders are still there. They just changed their business model and how they did business and what they did. And for realtors, for mortgage brokers, if you can survive and stay through and, lean up your operations, then it is an opportunity to gain more market share, because people will be leaving the space that were part-time or, didn't have any savings or whatever. And we saw it in 2008 and 2009, the industry contracted, construction, real estate lenders, it all contracted. But the ones that had that had a good business and, were able to, make it through the storm are the ones that, were still there, and they came out twice as strong on the other side and had a competitive advantage. So, it really depends on your situation. From a business standpoint, same thing, right? We see, legendary, industries that seem to survive and weather all, times. And it's, there's times to be lean and nimble, and there's times to be, fat and grow and get after it. And, the key is, where are the problems? That's where the opportunities are. So, what problems are you looking to solve? that's where the biggest opportunities are created. And as we innovate and as we evolve, we create new problems that need to be solved, which are going to create new opportunities. So that's what's exciting to me is we don't even know what's out there that needs to be solved.
Yeah. Again, if you go back and sort of study the history, a lot of great companies, a lot of great innovation are started in recessions out of necessity. And this time will be no different. I think this recession is going to be longer than most. The average is 17 and a half months. I think this could easily be 24 months. And it's just an opportunity. If you're in the real estate industry, and over the last 2 years, you just put a sign in the yard, you made some money, that time's over, right? But you can still, there's a lot of people. I'm speaking at an event in early August about hybrid real estate agents. It's just like add more skills. Just understand there's other things you could do.
Number one thing realtors can do if they're not already doing it, become an investor. You've got the skills, you've got the knowledge, you've got the contacts. Flip your model, become an investor, and start taking advantage of these opportunities that are going to come down the pike of people that need to sell and can't and things like that, where you can step in, take them over, do a lease option, do a rent to own, do an owner finance, something.
It's exactly my talk track. It's going to be like, hey guy, my whole talk track is basically in the first 5 to 10 minutes. My goal for myself is to virtually slap the audience, like to wake them up, scare them, and then just get them excited, because this is an opportunity to build wealth. Your income, right, what you report to the government may not be as high as it was last year, but your balance sheet could be way better if you have the right mindset.
Yeah, absolutely. Anybody who's in real estate day to day that's not investing one way or the other, it doesn't make any sense.
Just missing the boat, right? Yeah. And again, what I want people to realize, and I'm doing this now, a lot of people just get fixated on price. I am far more interested in terms. Right. Price is important. It's not like it's not important. I won't pay something stupid, but if I can get the right terms, I'll gladly give the seller their price. Would you agree?
Yeah, absolutely. Obviously we always want the best price, but yeah, if that's not, on the table, or they can't, or just doesn't work out, then there's other ways you can make a deal. There's all kinds of creative ways to make a deal, but ultimately it has to work some way or the other. And, people understand that when you get into negotiations, and especially when the market is shifting and you have people that can't sell or, won't sell or whatever, but they need to, and everybody liquidates. So everybody sells sooner or later.
Yep.
But yeah, terms can make deals that otherwise could not work, as well as, value add opportunities. So is there something else you can do with the property to add value in a way that isn't being maximized now that can offset, things like that. So just gotta be creative about it.
Yep. And again, it's about being prepared, right? I think it was the first episode we talked about Blackstone securing a $50 billion fund. They did that early. This is my opinion. This obviously could be wrong, but Blackstone raised that money without having any direct targets in mind. This is capital they'll probably deploy over the next 2 to 3 years. They know it's coming. They may have line of sight to some struggling assets, but these are going to be future buys that they don't see today, in my opinion. What do you think?
Well, yeah, and they're global. So again, they're looking around the world. They're looking at emerging markets. They're looking at, the debt crisis that, take Sri Lanka, for instance, that's the tip of the dominoes of all of these, countries that are in the same position that ultimately can end up, falling and becoming bankrupt. So they're seeing opportunities in emerging markets. In this country, there's a couple of interesting problems we had. We talked about the housing inventory dichotomy that we have right now. And we're kind of stuck, because nobody wants to sell and there's limited inventory. So there's nothing to buy. And how do you fix that? You need sellers to create buyers and, the whole balance it out. The other thing is the whole recession conversation. So, what's keeping this whole thing from tipping right now into a deeper recession? It's because, people made so much money in the last several years, especially the last couple of years with, stimulus, low interest rates, real estate values that, that increased, that people tapped into. So people, were able to build up savings. They were able to tap equity. They were trading in the markets, trading in cryptos. A lot of money was made over the last couple of years. And a lot of people were able to, build credit. So it takes a while for that to unwind, just like it did back in 2008 and 9. Even though the market went down and everything crashed, there was still a lot of people that had a lot of cash from the run up, and credit and things like that. It takes a couple of years for that to work out. So that's why when you say recession could be a couple of years, it could take, a year or more just to get into one, a real one.
Yeah.
Because of that reason, people have resources to work through and work on, but that, eventually that runs out. And, it could take 18 months to a year or, 18 months to 2 years to get into a real deep recession. Then you got to recover from there. the business cycle, the economic business cycle,
Yeah. Yeah. Great conversation. A lot of fun. Greg, where can people find you?
Yeah. GregDickerson.com. That's where all of my links are to YouTube and everything. GregDickerson.com.
Very cool. Thanks again.